Hello and welcome to the Stock Planner channel. Today I'd like to talk about INTC, Intel, and why it dropped and how I'm going to play it. I'm going to play it by not playing it. I'm going to play an ETF, XLK, instead. It's a technology ETF. Stay tuned. I think you'll like what I've got. First, I want to remind you that this is not advice. You must do your own due diligence. Once you learn this, you'll have a lot of fun and you'll make a lot of money. But you have to do your own due diligence. All I'm doing is showing you what I think I might do. I'm getting prepared for Monday. Let's get started. Looking at Intel, INTC's ticker, on the daily time frame, we can see that this is a good swinging stock. And if you can capture these swings, you can make some serious bank. It's not always easy thing to do. I use the MACD indicator to help me, the stochastic RSI indicator to help me. I look for crossovers, and the RSI. These three indicators sometimes predicts these reversals. And as a swing trader, that's what I'm looking for, reversals. But what the heck happened here? Earnings. Earnings happened. This stock has dropped more than 10% in a single day. I like Intel and think it has a bright future for the decade. Is it a buy? Buy the dip? I don't think so. The same thing happened to Honeywell when their earnings lower than expectations. Honeywell is a favorite stock. Oh my, look at IBM. Do you think earnings had anything to do with it? IBM, Intel, Honeywell. Everybody's trading MAD and Advanced Micro Devices, AMD. I think earnings had an effect on this stock as well. And it looks like we have earnings next week. Do you think the same thing's going to happen to AMD? NVIDIA Corporation. Everybody's trading it. They're trading options. Red Day on earnings is out, little ways out in November. I think all these stocks, these chip makers and technology stocks will come down. Let's take a look at the Qs, which has a lot of technology in it. Oops. Red Day too. After a swing up. Look at it, that's a nice swing. How about a technology ETF? That had a red day as well. The Qs and XLK are trading at its all-time highs. Rather than doing something with Intel, perhaps thinking about this ETF, XLK, or the Qs. It's shorted them. Now there's lots of news stories out there. The answer to this is earnings. And they revised them down, as the other companies are doing. Fell more than 10%. And this analyst feels that, as I do too, that Intel has a future, especially for the next 3 years, and especially for the decade. But I think it's going to take a while for Intel to recover from this mess. Intel reported weaker than expected third quarter sales results, as other companies I suspect are going to have the same problem based on shortages of the chip. So, looking at XLK, let's see if we can put together some sort of short for the next few months. Option Strat is a tool, a simulation tool, that you can use to play around with some strategies. So we're looking at INTC, and you can do a short put on INTC somewhere in here. And then if you get some money, and if it gets down that low, you have to buy the stock. This is a $40 stock. This is great if you want to play that game. But I think I want to short the ETF. And I have a negative bias for this month too. By the way, that negative bias is costing me about $700 so far in my small account. So XLK is trading around 158.41. Going the option strat, technology spider, going out to Christmas. Let's go out to January. I like to set the chart range to 8% because that's where I backtest a lot of my strategies too. And it's my profit target. If it gets to this, pegs this line here, this is what I can take down. But we're not doing a short put here. A short put is a long strategy. This time we're going to do a bear call spread. Bear call spread, January, 8%. This is a short strategy. This is my profit line. It's currently at 158. And this one, if it goes below 157, which I think it will, we'll have a winning game on our hands. And if it goes to 8% quite quickly, which it possibly can, the volatility is high, this is what you'll end up with, between $80 and $135. The max loss on this, very nice, $65, and the estimated margin is $200. This is a good trade. I like this. It's a long ways out, but if it ever reaches 8% from where it's at now, this is what you can take down. And $70 on a $200 investment is a good profit percentage. I like this trade. Stay below 157, right there. 157 is about there. So if this stock goes down to that level, and this is the 50%, I'm just hand drawing it in there, but that's where I think it definitely will come. And I have a downward bias overall for the market. So I'm very comfortable taking a short here for 70 to 135 profit. Now I'll have to wait this out, but that's where I think it's coming. I think that the RSI is saying it's oversold, or overbought here, and this is about ready to cross. Everything is telling me that things are about to change. Zigzag at this point doesn't know what it's doing, but knew what it was doing up to that point. So I don't know. I think we're going to have a red candle definitely on Monday. What do you think about this trade? Is it going up? Is it going down? Are you optimistic for technology? I am overall, but this chip shortage is affecting it, and I have a downward bias for the market, which is not proving out for October. So you have to make your own judgment, drawing lines, and it's everybody's guess. Nobody can predict the market but the market. I use indicators to kind of give me a feel. Sometimes they're wrong. Please leave your comments below. I like to hear some disagreement. My trading has gotten much better since I've been sharing. That peer review really helps. I'm a little more careful. And the last 3 weeks, the stock market has been good to me. And the last 3 days, took a little bit back. Please like and subscribe to this video. The channel can use your help. And stay tuned for more ideas. Happy trading. Catch you on the flip.